So normally when the markets bounce, you bounce back to prior support and then it becomes resistance and you roll over again. This is what I was expecting. But with some central banks pausing, right? Was it Australia, Bank of England? Basically, you've got rumors that the Fed's going to pause, and they will pause on the next meeting. And some people think that's it, they're done hiking, and they might be actually, but I don't think that's a cause for celebration because if rates stay where they are, it's still way too high for the system, for the banks, for all those that hold loans, for mortgages, commercial real estate, etc. So I think the market is a little overexcited here. And this bounce, this is a short squeeze. This is way too much. Now I do think we're at resistance finally. So this squeeze, let it continue. There were gap ups, continuations. Now look at the Nasdaq. You know, we're all the way at prior resistance. For me, that's it. We start to move back down, maybe fill some gaps. I think the excitement needs to calm down and some perspective about where interest rates really will be and for how long, just because they're not going up anymore. So Nasdaq, this is resistance for me. Let's let it go back down. This descending that we took out, does it act as support? I don't think it will. I think we're going to actually fill some gaps. Let's see. Let's see if we get a red day because it's been continuous green days. This is really, really strong. So that's the Nasdaq. S&P, very, very similar. So I haven't added the horizontal. You can see where it is right here. I think we start to go back down. Do we fill this gap? Do we fill that gap? Let's see. But I still think we will start to see some red. Remember the geopolitics in the world. There's just so many reasons for the markets to go down. And just because one or two central banks and maybe the Fed will pause, you're not allowed to make new highs. I mean, rates are still extremely high, way too high for the system. Dow Jones, look at it. They're all at the same area, roughly, right? Look at this prior peak with their, yes, it's a better close, but still, and there are the same gaps to fill. So for me, but look at the Russell. Russell again underperforming. I don't think that's a surprise. You know, the bank's also underperforming, generally speaking. So here I mean, you're nowhere near. The chart looks totally different. So the S&P, Nasdaq are very, very similar. Dow Jones also a bit similar, but the Russell you can't really make out. But look at this, you know, also gaps to fill. So if they start to go down, Russell will also go down, probably more. This gap will probably fill. And remember where we are, we actually made new bear market lows. So this again will be the first to lead the charge down. If we look at the banks, yes, they actually look like the S&P a bit in terms of their recent high. Look at this XLF that started already to underperform a little bit, so we could start to move lower. And again, if we do make the whole move lower, the new bear market lows, and that's the XLF, that's the senior banks. Let's look at the KBE. Obviously, these are destroyed more, so the rally will be stronger. But look, already started to move lower. If the markets move lower, so will the banks, and this could quickly end up back from whence it came. The KRE is the same thing, really, as the KBE. So for me, yes, very, very impressive rise. I do think it's, I don't want to say over forever. You can never be sure, but you know, it's time to relax and make a move lower. So let's look at rates. The 1 year is just constantly sideways. You can see overall it's moved down. However, the 2 year also, look at the move down. Obviously, the market move up has been influenced by the move lower in yields, not just the rumor of the Fed and other central banks actually pausing, but the market action in yields itself. So as it moves down, that's less pressure on the stock market. So that moved up. The 2 year, you can see it's just moved lower, but look, it started to bounce a little bit. Maybe we retrace and go back up a little bit. That would coincide nicely with the market move down. I think the move is a bit more obvious once you hit the 5, 10, and 30. So look at the 5. Also hit some ascending support, clearer ascending support. Back to breakout zone, by the way. Look at this resistance that we broke out of. Yes, we kind of back tested here, but now we've more back tested. So I think a move back up will coincide perfectly with a move low in the S&P. 10 year also, look at this ascending, right? A little of an exhaustion sell off here. Nice, not the best hammer, but still made up half its losses. Next day was green. Next day was sideways, and so far we are moving sideways again. So a bit of a base forming here on the 10 year, probably going to rise from there. 30 year, same thing, ascending support, touching support, not just the ascending, but the prior low horizontal. So for me, we've got quite clear support forming on the 30, the 10, the 5, a little less obvious on the 2, but the 2 will follow the rest. The 1 year is always a maverick. But I think yields go up. markets go down. Good luck out there.